are the speaker's own and not Tiger Brokers. Today's session is strictly for educational purposes and is not financial advice. Investing involves high risk, and past performance does not guarantee future results. Now, for those joining us for the first time, a quick introduction. Tiger Brokers is a leading global online brokerage firm. Beyond just trading, our Tiger community provides a wealth of expert commentary on market trends, industry news, and high conviction investment opportunities to help you stay ahead of the curve. For viewers who are interested in exploring investment opportunities further, you may also download the Tiger platform, open an account, and fund it to access a wider range of investment products. Our flagship trading app, Tiger Trade, has over 20 million users with more than 2 million active investors across many countries. It empowers you to trade a wide range of securities in the US, Asia, and Australia. And that's not all. We also have powerful tools to enhance your investing experience. We have very handy tools like Tiger AI, Boss Card, and the Cash Boost account. With Tiger AI, you can analyze market data and generate insights in real time. And with the Cash Boost account, you can get at least 20,000 Sing dollars to enlarge your equity and ETFs buying power. So if you're ready to take the next step, check out Tiger today. You can also open an account and deposit using Ross Dong's referral code to unlock exclusive USD cash vouchers via his Tiger Prestige account. Now, before I introduce our special guests for today's live stream, I would like to mention that we have prepared 4 lucky draws with 1 winner chosen each time, where you can walk away with exclusive Tiger merch. We've also prepared Tiger coins for everyone tuning in today. Stay for 10 minutes total to grab 25 Tiger coins, or keep listening until you hit 20 minutes for extra 25 coins and another 25 for 30 minutes. So enjoy the session, everyone. And to participate in the lucky draw, you just need to leave your answers in the comment section, and our team will randomly pick one winner. Now, without wasting any time, let's move straight into our first lucky draw round. So for our first question, semiconductors, memory chips, Korean equities, US equities, ETFs, single stock leverage products, and etc. How many of these have you traded or invested in before? Please name them. All right, time's up. And this question has no specific correct answer, so a lucky winner will be selected randomly from all participants. All right, let's get into it. Today's topic is Inside the AI Memory Boom, Opportunities and Challenges for SK Hynix. Our special guest speaker is Ross Dong. Ross is a founding partner at Morning Cloud Asset Management, specializing in macro trading and US equities. He spent over 15 years as an equity trader at firms like JP Morgan and KCG, and holds a degree in applied mathematics from Columbia University. Ross is known for spotting secular growth trends early. His 10-year average annual return sits at 78%, driven largely by high conviction leaps plays, including 100 times return on MU and 600 times on Tesla. Today, he manages over 30 million in AUM and leads a community of 15,000 plus members. Welcome, Ross.
Thank you, Vian, for having me here, and good evening, everyone. Okay, Vian, do I start from here?
Yes, please continue.
Sure. Good evening, everyone. It's a pleasure to have you all here. Before we dive into the data, let me introduce myself very briefly. I hold a Bachelor of Science degree in Applied Maths from Columbia University, as Vian said, and I spent the defining years of my career as an equity trader at JP Morgan. So today, I am a partner at Morning Cloud Asset Management. The theme of today's session is inside the AI memory boom, opportunities and challenges for SK Hynix and other memory stocks. So in this line of work, we have a saying, major trends do not end in a day or a week. So it takes time for the internal logic to fully unfold. So that's the gravity of macro forces. So and today, I will map out how that gravity is reshaping our portfolios for 2026 and for the recent sell-offs and bounce back in the AI memory stock space. Next slide. Yeah, next slide. Those are the introduction of myself. Yeah, so that's this just some reasons I choose the secondary market. You guys can take a look at it. Next slide. So we're an active strategy fund. We synthesize top-down macro logic with bottom-up stock selection capabilities. So in our view, there are two frameworks in the world. One is industrial and technological cycles. The second one is monetary and financial cycles. Next slide. Yeah, so today we have 6 topics. The recent sell-off seems moderating in Korean market and US market, and emerging signs of buy on dip capital flow. The second topic is tightened regulations will limit retail access to single stock leverage ETFs in the Korean market. It's also likely moderating the volatility of KOSPI market. Korean strong economic fundamentals 2026 this year and 2027. GDP growth forecast at 3.7% and 3% respectively. Next slide. And also the negative impact of monetary tightening would be cushioned by the positive impact of expansionary Korean fiscal policy. Solid memory fundamentals prove to be resilient despite market concerns, and the memory undersupply should continue despite recent market concerns. Next slide.
Okay, I know that's fast, but it's time for our second lucky draw round. You guys are doing great so far, but let's see who's been paying the closer attention. So here's question 2. What is Korea's projected GDP growth rate for 2026 estimate according to today's session? A, 2.5%, B, 3.7%, C, 4.5%, or D, 1.8%? Okay, I see a lot of answers. So the correct answer is B, 3.7%. Huge congrats to the winner, which will be selected in a while. Now passing it back to Ross.
Yeah, so this slide basically describes our current era as a metamorphosis, as I would say. We're witnessing a structural shift from an economy driven by physical energy to one powered by digital intelligence. Looking at the next 100 years, the mastery of compute will replace the mastery of resources as the primary driver of wealth. As investors, such as me, I think we must position for this radical rewrite of the global system. Next slide. Okay, now, so is the US and Korean AI infrastructure boom reaching a short-term peak, or is this still the early stage of a longer-term bull market? That's the key question investors are asking today. So in my view, the sale of memory stocks recently from the end of June to now creates a compelling entry point. The recent concerns include the secondary derivative deceleration, higher capex, despecking were predictable months ago. But this is not a normal cycle. Memory is a bottleneck, increasingly the bottleneck to AI builds and agentic CPU builds, which appear durable. The result is that memory shortages continue to intensify, with data center memory prices up 25% in the third quarter. That's some deceleration on some level from higher second quarter increases, but that has been obvious. So long-term agreements like HK, Hynix, Samsung, and Micron, including SanDisk, and despecking could flatten the amplitude of the cycle versus inflated expectations, but increase duration, which is likely better for stocks in the long run. So, there are four main reasons the sale of HAP began at the end of June. So following Micron's exceptionally strong earnings report in late June, I remember it's June 25th. So we decided to significantly reduce our positions in Micron and other AI infra-related holdings when Micron traded around 1,200 on June 26th after the earning. So at that point, I believe the market had largely priced in the near-term optimism surrounding AI memory demand. So our view is that Micron could potentially retrace toward the 700 to 800 range, where we would gradually rebuild our position along with other AI infra names. So importantly, we view this as a short-term top. You may say it's an unimportant top rather than the end of the AI bull market. In other words, I believe the long-term investment thesis remains intact, but valuations need time to reset after an exceptionally strong rally. So there are four reasons behind our view. First, cloud hyperscalers may increasingly follow XAI strategy of monetizing excess compute capacity, like Meta did. So instead of deploying all their GPUs internally, major cloud providers could lease unused computing power to third parties to make profit. This would improve utilization rates while potentially reducing the urgency of incremental GPU purchases in the near term. Second, OpenAI's delayed IPO highlights the uncertainty surrounding the commercialization of closed-source frontier AI models. While AI adoption continues to accelerate, the business models for leading AI developers are still evolving. Investors become more selective as they reassess the path from technological leadership to sustainable profitability. So third, stronger than expected guidance from ASML and TSMC combined with Samsung's capacity expansion plans suggests the market attention may gradually shift Earlier this year, as you may remember, memory stocks were primarily based on order visibility and AI demand. Going forward, investors are likely to place greater emphasis on the memory inventory cycle and future supply expansion. In other words, valuation multiples may increasingly reflect cycle expectations rather than purely AI-driven order momentum. So finally, we observed capital flowing out of the US AI and technology sectors since late June. This doesn't necessarily signal a deterioration in fundamentals, but it does reduce momentum-driven buying in semis, which had become one of the most crowded trades in the market. So after this recent correction, and along with my fund, remain constructive on the AI infra theme over the medium to long term. The fundamental supply-demand imbalance in advanced memory has not changed. Capacity expansion, particularly for leading-edge HBM, still lacks structural AI demand. So while we expect volatility in the short run, like we are in now, I believe this should be viewed as a healthy correction with an ongoing secular bull market, not the end of it. As you can see on this picture, the KOSPI correction was mainly led by foreign active investor sell-off in terms of rebalancing and profit taking. So over January to June this year, foreign active investors' Korean active exposure expanded to US $1.8 trillion. Foreign investors' share of Korean active market rose to 38% at the end of June 2026 this year. So that's pretty crazy. However, capital outflow pressure from foreign active investors has recently moderated. So first, the scope of rebalancing by foreign active investors would have substantially narrowed. Second, fund flow into overseas KOSPI-related passive ETFs like SKHY has accelerated since July 9th. So around $3 billion of fund flows was injected into iShares MSCI South Korean ETF, so-called EWY, over the following couple of days after July 9th. Next slide. This is the AUM of single stock leverage ETFs like SEC, like SKH, listed in the Korean market and other Asian markets. So as you can see in the picture, the AUM has like nearly quadrupled since May 2026. It's insane. So around this, after this insane period, we typically see a peak. Next slide. In our view, Korea's National Pension Service, called NPS, could gradually resume rebalancing of Korean equities if KOSPI increases above 9,000 level this year. Maybe. So for example, Korean pension funds sold about Korean like $0.3 trillion per day in the middle of January 2021. So if Korean pension funds resume a similar pace of rebalancing in terms of daily KOSPI turnover, Korean pension funds could sell around 0.8 trillion per day, like around this time frame. So we believe the NPS, Korean National Pension Service, will likely remain overweight domestic equities for longer, considering potential public backlash to a sharp rebalancing by the NPS. So amid KOSPI correction, pension funds, including NPS, unexpectedly continued their buying streak in the KOSPI market for consecutive weeks, like after July 9, July 10, between July 13th and now. Next slide. Yeah, so this is the Korea's strong economic fundamentals. So I keep our view that 2026 and 2027 GDP growth forecast at 3.7% and 3% respectively. I expect semi export growth from Korea to accelerate to around 170% in 2026 versus 2025, 22%. Price-driven semi export expansion could likely contribute around 2.6 percentage point for 2026 GDP based on estimates. So for 2020, for this quarter, 2026, I saw surprisingly strong net export momentum backed by tech export volume and weak import volume. So on the domestic demand side, the negative impact of higher oil prices has been partially offset by the maximum gasoline price system. The cash voucher distribution in May to June under the first supplementary budget would cushion the effects of higher oil prices. So favorable terms of trade conditions could persist for a considerable period, allowing GDI to maintain a solid growth trajectory. I expect improvement led by the rise of export prices to have significant ripple effects on the domestic economy. By boosting consumption through higher wages and asset values in the IT sector, and by immediately expanding large-scale facility investments by semi companies. Next slide. Yeah, this is the KOSPI 12 months forward PE as of July 16th. So KOSPI at 12 months forward PE is at around 6 times. So compared to you can see 14 times at the beginning of this year and 15 times before. So now after recent correction, the valuation of KOSPI is pretty low. So the current valuation in terms of 12 months forward PE has fallen into its historically lowest range of the past 20 years. So so in this so on this picture, on the semi sector, despite recent market concerns about potential memory slowdown in recent quarters and LTA concerns, I currently anticipate no change to memory demand and expect ASP momentum to remain robust in the second half of this year. So given the ongoing significant supply-demand imbalance, I think the recent share price pullback of KOSPI equities led by Korean memory suppliers is more of a technical correction driven by market-wide profit taking, and therefore could represent a potential buying opportunity. Next slide. Yeah, on this picture, you can see the super cycle of NAND and DRAM. So I believe this current upcycle is fundamentally different from previous memory cycles. While pricing for both NAND and DRAM continue to strengthen, the key difference lies in structural AI demand. So DDR5 adoption is accelerating across hyperscale data centers, and memory content per server continues to increase. So although periodic corrections are inevitable, I believe the long-term pricing environment will remain more resilient than in previous cycles, as supply expansion still lacks demand for advanced memory products. Next slide.
Okay, now it's time for our third lucky draw round. On the screen, we have question 3. To help moderate KOSPI volatility, Korean regulators tighten access to which product? A. Single stock leverage ETFs. B. Real estate investment trusts. C. Crypto-backed derivatives. Or D. Government treasury bonds. And the correct answer is A, single stock leverage ETFs. A huge congrats to our winner. We have one final lucky draw left at the end of the session, so please stay tuned. And now back to you, Ross.
Sure. So this past week, Moonshot AI released another advanced AI model called Kimi K3. So this is a model that is the largest open source model in the world and outperforms some key US frontier models for certain workloads. So there are parallels to the release of DeepSeek R1, which drove a similar correction in stocks, as you can remember in 2024. But K3 is more about scale, as it's the largest open source model in the world at 2.8 trillion parameters and has a 1 million token context window and always on reasoning mode. So overall, I would note that the costs of an open source model are inherently going to be better than a frontier model because of the margins. Another point to make here is that the open source models are generally more memory intensive than frontier labs because context windows are longer and the KV cache requirements are growing in absolute terms, even with quantization, making open source deployment more HBM dependent and storage intensive. Next slide. This is about optical. So optical valuation multiples were at record levels in June and the beginning of July. So optical valuation multiples have hit record levels because optics are the nervous system of AI clusters. As GPU clusters grow in size, the bottlenecks shifts from the chip to the interconnect. So the market has recognized that you cannot have AI without high-end optical modules. Next. The company Lumentum gives explicit capacity expansions, this is the major signal. When a market leader moves this aggressively to build out the infrastructure, it tells you that you have high visibility into long-term demand. They are not just building for the next quarter, they are building for a multi-year cycle. So this is still pointing to a shortage. So despite expansions, like the optic supply chain checks still point to a structural shortage in premium components. The scarcity provides a powerful tailwind for pricing power. In this environment, the winners are those who have secured their supply chains and can deliver at scale. Next slide. Yeah, this is the shortage of opticals. Next slide.
Now let's bring out our final lucky draw question for all Tigers. This is your last chance to win today, so get ready. Question 4. What's the current trend in the NAND and DRAM pricing according to today's session? A. Falling sharply. B. Flat with no movement. C. Continuing on an upward trajectory. Or D. Highly volatile with no clear direction. And the final answer is the continuing on an upward trajectory. Now passing it back to Ross.
Sure. So I think many of our audience are very interested in SK Hynix and Samsung. So in short, SK Hynix stock has been up 500% plus in the last year. And so this is a stock that has moved massively because of the structural changes we've seen in the memory market. And that is this massive AI boom is causing huge demand for certain memory chips, in particular high bandwidth memory, DRAM, etc. All of this going into chips and data centers that are powering this AI boom. And so that this has led to a massive shortage, huge price rises, and that's why you are seeing record profits at the likes of SK Hynix and at Samsung as well, and also Micron. And so that has really supported the share price. So I think more recently, there's a bit more volatility as debate swells around the stickiness and the solidity of this sort of AI build out right now. It's a big debate over that. So at this point, I think what's going to be key for the market is how structurally different is the memory market now versus historically in the past. What you would see is that these very extreme sort of peaks and troughs of demand cycles where demand would be rising, supply couldn't catch up, prices would rise, these companies would do very well, and eventually supply would catch up, and then you would see the price fall. So what's happening now is that there's unprecedented demand for memory. The question is how quickly can supply catch up? Now I've spoken to some industry experts over the last 2 years. The most bullish cases are second half of 2027, where we're beginning to see that supply catch up. So most are seeing that maybe 2028 or even 2029 is where that supply catches up. So this is very capex intensive. And so you've heard announcements about Micron, Samsung, SK Hynix wanting to bring supply online. But of course, the reality is that you've got to build this infrastructure out to be able to make those chips. So, and that's why we are at that moment. So in short, despite recent volatility in the market, I think like the sell-off of memory stocks presents a compelling entry point. This is our YouTube channel. Thank you, Vian, to display it in the slide. And if you want to hear us more, welcome to follow our YouTube channel. Next slide. Yeah, this is our YouTube's name and our website. I think that's concludes today's session.
Okay, so we will now open the floor to audience questions. Feel free to submit your queries in the comment section and we will address them live. And yeah, huge thanks, Ross, for the incredible session. I'm sure everyone walked away with some fantastic and actionable insights. So if you guys have any questions, please drop them in the comments.
Ian, do I read question myself?
No, I will address the questions. Okay,
Okay.
then starting from the top, from Kiki. We have a question asking, what are the GDP growth forecasts for like South Korea in 2026 and 2027, as mentioned in the slides?
Oh, I think I outlined in the slide. It's 3.7 and 3% respectively for this year and next year.
We also have another question from My Market Diary. They asked if, like, what is the ultimate long-term objective stated in the third reason for entering the secondary market?
Ultimate what?
The ultimate long-term objective.
I guess he's mentioning about the AI infra super cycle.
Yeah.
Maybe.
Yes. What do you think
I guess,
about it?
I guess it's a super cycle. Take myself for example. I'm embracing AI. So I guess it's a 5 to 10 year super cycle that we can anticipate. But it has like ups and downs and volatility, like the recent sell off. So we will like ride the trend, but also we will do some swings, long and short.
Okay, thank you for your insights. We also have another question. Like, in your opinion, what could be the final trigger point of the AI market crash?
Yeah, there are four reasons. I think I also outlined in the slide. So first, cloud hyperscalers may increasingly follow XAI's strategy of monetizing excess compute capacity. That's number one, like Meta did 2 weeks ago. And I think Google is also doing it. So instead of deploying all their GPUs internally to help train their models, major cloud providers could lease unused computing power to third parties like AI. So this would improve utilization rates while potentially reducing the urgency of incremental GPU purchases in the near term. So that's the first potential reason. The second reason is that OpenAI's delayed IPO highlights the uncertainty surrounding the commercialization of closed source frontier US AI models. More and more companies in the US are using like Chinese models, they're open weight. So while AI adoption continues to accelerate, the business models for leading AI developers are still evolving. Investors may become more selective as they reassess the path from technological leadership to sustainable profitability. And also, I think the third reason is more important. 2 weeks ago, ASML and TSMC both like released their earnings combined with Samsung's capacity expansion plans. Those suggest the market attention may gradually shift. So earlier this year, memory stocks were primarily priced based on order visibility and AI demand. But going forward, investors are likely to place greater emphasis on the memory inventory cycle and future supply expansion instead of order visibility. So in other words, valuation multiples may increasingly reflect cycle expectations rather than purely AI-driven order momentum. I think that's why. And also, I've observed capital flowing out of the US AI and technology sector since late June. That's mainly profit taking because like AI memory stocks are like up 400 to 500 plus. So that doesn't necessarily signal a deterioration in fundamentals, but it does reduce momentum-driven buying in semis, which had become one of the most crowded trades in the market.
Thank you so much for your insights. I'm sure that's very beneficial for all the viewers. And we also have a question from New Tiger. They ask, despite recent market concerns, what is the current outlook for memory undersupply?
The undersupply would not improve until 2028 to 2029. because like the annual capacity and the annual supply increase is like 20 to 30% for memory, for high bandwidth memory. Memories like HBM4, HBM5, but the demand side, the AI demand side is like 200 to 200% or like 300%. That's a big gap. So I think the undersupply will not improve until late 2028 or 2029. That could also be a potential peak at that time, but we still have time, like 2 to 3 years until we reach that capacity. Like in other words, like oversupply is always a risk. If the current demand we're seeing right now begins to fade, but I think that's always the big question. So typically, these memory makers, the three big ones, have been very conservative in bringing on like more capex, particularly because of that concern. But given what we're seeing in terms of the big demand specifically for HBM, they're feeling a lot more confident to put that capex in now because they're seeing demand and they know that. So that oversupply is at this point is less of a concern, it's more undersupply, as you said. So I think because even with some of the projections of the supply they're bringing online, they may just sort of bring it to equilibrium rather than oversupply at this point.
Okay, thank you so much for your comments. Now, moving on, we have a question. They said, as a hedge fund founder, what are the measures to take while embracing AI?
So in my workload, I feel like AI can help 90% of my workloads, or 85 to 90%. That's pretty big improvement. So in the past, I need like a team of 5 equity researchers or quants to help me like create insights or ideas, or which stock to buy, which stock has more potential to go up. But now I have some like agents, they can generate trading ideas for me every day. I talk to them every day to different models, like Kimi, like Cloud, like GPT, like DeepSeek. So they're like my counterparts. So I talk to them every day. They also help me generate more trading ideas and investment ideas. So that's the way I embrace AI, and so is my company. So I think as a hedge fund founder, or as a like normal investor or a trader or economist, AI is helping. AI is helping a lot, at least for the 90% of the workload. The last 10% still depends on yourself, because that's the AI cannot have like the most valuable commercial idea. You still need to have to research on that on yourself. But AI can do the 90% of work. The last 10%, it still depends on yourself.
Okay, thank you so much. And we also have someone asking, how will CXMT affect the giants?
CXMT would go public, I think in the second half of this year. I remain bullish on CXMT, but it would also like it will also take out liquidity of other stocks, especially in the Hong Kong market. Yeah. So in short, I remain bullish on CXMT, and some people already priced in $6 to $7 trillion, 6 to 7 trillion RMB. Yeah.
Okay, understood. Thank you so much. And now moving on, someone said, oversupply is a problem. However, the earning always showing the demand is still there. And hyperscalers are still continuing their expansion due to the demand. How do we know the demand is sustainable?
You said hyperscaler are a what? Sorry.
Hyperscalers are still continuing their expansion due to the demand. And how would we know if it's sustainable?
Yeah, you just look at their capex. So Google just released its earning yesterday, and it has some volatility after it released its earning. So as long as those capex, those hyperscalers continue to spend money on data centers, on AI infra, on compute, I think it's sustainable. But on the other hand, if those hyperscalers, if one of those hyperscalers stopped spending or stopped increasing their capex, is a warning sign for the whole AI memory space and the whole AI infra space.
Okay, thank you so much for your insights. And I guess now possibly the last question. Someone asked, does China AI model uses lower memory bandwidth or lesser memory, like HBM or SSD?
Yeah, I think Chinese open weight models, they outperform some workloads compared to US AI frontier models, and they're cheaper. They're much cheaper than US AI frontier models. So I think more and more companies are using or embracing AI Chinese open weight AI models because like for those close end frontier models, they would potentially take data from you and use and feed their own model. You don't want that. But for open weight models, you can just train them with your own company capacity. That's safer. So I think that's also one of the warning signs. This AI memory capacity or like concern that people have currently is because like if more and more US companies are using open weight models, they are underweight US frontier models. And that's also why OpenAI delayed its IPO. Yeah.
Okay, huge thanks to Ross for that incredible Q&A session. I'm sure everyone has walked away with some fantastic and actionable insights. So, as we wrap up today's session, a big thank you once again to Ross for sharing such valuable insights and frameworks with us. And for those of you who want to continue learning from him, make sure to follow him on his social channels. You can find him as Ross 美股投资 at tothemoon.com or check out his YouTube channel, TMI Partner, to explore his investment strategies and market insights. You can also stay updated via his X account, Rostong, or visit his official website at tmipartner.com. Thank you, everyone, for joining us today. We hope you found the session insightful. And if you want a recap of today's live stream, you can always search for the recap video in the TigerTrade app. And another thing that I want to mention, if you see a questionnaire under the chat, if you answer the questionnaire, you could get an additional 50 Tiger coins. So we look forward to your participation. And yeah, that's all. We look forward to seeing you in the next one. Take care and happy investing.